Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to do our daily technical analysis update of commodities. I'm going to give you my financial opinions. We're going to work our way through the dollar, yields, precious metals, and commodities and ETFs that I follow. And we'll dive in here and I'll give you my opinions. If you guys need any help with anything, definitely check out finding-value.com. Become a platinum member, join our community. And we do have a Saturday Platinum question and answer session at 7 a.m. Mountain Standard Time. So let's dive in. Let's take a look. We continue to see this debt ceiling have an impact on the markets. We're seeing stronger dollar, and that stronger dollar is being led by people selling bonds. So interest rates continue to move higher. So when you look at the 2-year yield, it is rocketing up 3.5% here. It is moving with some authority. That is weighing down on the markets. These higher yields and the fear perhaps around this debt ceiling resolution is causing yields to go up. It's causing people to sell bonds. We're seeing the 10-year yield go up dramatically, 2.6% roughly. So this has been a dramatic increase in yields. And remember, this prices assets, and it may price assets differently. And then we got the 30-year yield up 1%. So we've been moving up in yields, and we've been moving the entire curve up, and the short end is moving up the most, which means the curve is inverting. And that can weigh down, it definitely weighs down precious metals, and it can weigh down other sections of the stock market. So TYX, TNX ratio is dive bombing. That's the yield curve inverting. Precious metals do not like that. And it doesn't impact oil as much, but oil is definitely getting impacted by the debt ceiling. If there is a default on the debt, we're probably going to see interest rates spike, which we're kind of seeing already. And we could see a big haircut in a lot of different things because it will impact a bunch of different sectors and impact people's Medicare, Medicaid, getting paid, all sorts of different things, pensions, retirement stuff. There's a whole slew of things. So this ratio is declining. Bond prices down a little bit, signaling that they're getting sold off. And that's what kind of is going on with the yields. Precious metals are down. They do not like that higher dollar. They do not like the curve inverting. So we're down $16 on gold. Again, we could reach all the way down here and still be okay in terms of a retest. Silver down 1.4%, heading down with those yields going up. And platinum holding steady for the day, but it still looks on the weak side to continue lower. Now, if there is a debt ceiling resolution, we could see a dramatic reversal in yields, which would be a dramatic reversal in the price of some of these assets. So we could see a strong move, a strong counter move, if they have a debt resolution. XAU to gold ratio, that is still pulling back. And that's what we're getting with these higher yields in place. And again, we haven't broken out of that downtrend line yet. We're still very, very cheap. Now, the question that I have is, and I don't know this answer, I don't think anyone does know this answer. I think that the yields are going up because of the debt ceiling and what's going around that debt ceiling. There could be increasing interest rates that are not attributed as much to the debt ceiling. So I don't know if this move is entirely dedicated to the debt ceiling or if only partially dedicated to the debt ceiling, or if interest rates would be going in the opposite direction, which would be lower because people are fearing a recession. So we're going to have to wait and see until we get debt ceiling resolution and see which direction these yields go. The CRB index is down today. You can see it's a larger down day. We did see oil definitely sell off. And those payments of everything in the system, if it were to get delayed, would definitely impact the demand for oil, because those payments are going to have an impact on demand. I'll just put it that way. CRB to S&P 500 down a little bit, but still above that fib retracement level of 0.618. GDX lower, quite a bit lower. It still looks like it wants to go lower. If yields continue higher, this is going to continue lower. GDX, same thing, and SILJ. I don't really see reversal patterns here, so it looks like we're in a strong downtrend, which is basically opposite of the inverted yield curve, the dollar, and higher yields. And that will persist until we get a resolution. Crude oil also getting hit today, down 3.28%, even though we've got a massive draw on inventories. And could this go down a little bit because of the scare of the debt ceiling and all that? Definitely it can. It does look a little bit almost like we could pop out to the downside and revisit this if they don't do anything with the debt ceiling. Natural gas a little bit lower, down 4.75%, still basing out down here. XOP, yeah, you know me, heading lower today. We are still in this pattern coming towards the tip of the pattern. Are we going to bounce out to the downside, hit $100 and head back up? I don't know. We'll find out. And I think it highly depends on what they do with this debt ceiling thing, because we could see a little bit of a scare to the downside if things don't get resolved in a timely manner. OIH also heading lower, and this is almost like a retest going down. So actually it looks quite good. Could potentially head on up, depending on where oil goes, and the debt ceiling, and yields, and all those things. The Sprout Physical Uranium Trust moving sideways. It's holding in there for the day at least. URNM slightly lower, still within this big pattern. And then URNJ lower even more, as it's a little bit more volatile than URNM. TAN still moving sideways, doing its sideways thing for a very long time. Consolidation. COPX still getting some selling pressure. This still looks weak to me, that where we could head lower. And again, the economy is going to get hit if they don't have a resolution on this debt ceiling. Lithium still within the pattern, but slightly lower today. There's that big pattern. There's the breakout. There's our little return move. REMX doing the same thing. We came on up, broke out of this resistance line, came back for a retest, and we're still within the pattern. The S&P 500 is up today. Sometimes the overall stock market, things priced in dollars could go up when the dollar goes up. But I still think the dollar will reverse in the future along with yields at some point. We just have to wait. But we're up today. We're up today in the NASDAQ as well. This has broken to the upside. We'll see if that's a false breakout eventually, if that will turn and head back down. I don't know if it's going to, but we'll see over the next couple of weeks. Emerging markets down today, but again, this is going to move counter because the dollar's moving up. XHB holding steady for today. There we are in the pattern that we've got going on. MOO, again, slightly lower. It looks like it's trying to put in a short-term little movement to the upside, but I think we're going to eventually work our way down to the low 70s. Copper, surprisingly, is up today, even though COPX was down. But to me, this still looks like we are in a downward momentum, downward movement, and this is just a inverted bloody nose continuation pattern to the downside. Iron ore, trying to put in a base here. That's what it looks like to me. So that actually looks decent. We've got nickel prices heading a little bit lower. And again, this is going to head lower. Anything base metal related is going to head lower. Even precious metals, if the interest rates really start kicking into high gear and the DXY starts moving up, things priced in dollars will go down with strength in the dollar. Aluminum holding steady today, 0.24%, just moving sideways there. Baltic Dry Index getting a little bit more selling pressure. And remember, a lot of things are selling off. This will probably sell off with the base metals if base metals become cheaper and in less demand. We've got Newcastle coal futures trying to grind sideways. Just give it time. Ethereum grinding sideways and Bitcoin grinding sideways in the short term here. There's the dailies there. So we're just grinding here. And we've got a lot of support here. We're just grinding right on the top of that support level. So that's what we've got for today, guys. That's a lot of selling pressure across the board in a lot of different areas. And these rates are just rocketing up. I think it's due to the debt ceiling, and we're going to have to get resolution here. Once the resolution comes through, whatever the heck they're going to do, I do think yields will calm down. But if we don't get resolution, they're going to continue up. So get ready for some volatility here in the short term. And that's all I'm going to say. Get ready for volatility. Give me a thumb up for the content, subscribe to the channel, and subscribe to the website if you guys like. That's all I've got for today. We'll catch you later. This is Finding Value.